Hey, how's it going, everyone? Let's go ahead and talk about Marriott Vacations Worldwide. Ticker symbol VAC, Vacation. This is not a REIT. It's a timeshare company with a modern twist. And this company just bounced back from its 52-week low of $72 a share back in around December, November. Now they're trading roughly for about $94 a share, and their PE ratio is just shy of 15. In this video, we are going to look at the intangibles, the finances, and run some valuation models to determine if it's a delicious or a disgusting dividend stock. Not one person talks about this company, and I actually found it by mistake. When I went through their balance sheet and looked at their income statement, my goodness, what a hidden gem. They are basically in the business of timeshares, except on a points system. Their customer base is the top 1% of Americans because the customer has to pay an annual fee to be a part of the vacation club. And that annual fee is in the thousands of dollars. So their business model is similar to Costco, in which Costco actually generates their free cash flow from the membership subscription fees. As a member of Marriott Vacation Club, you'll be able to book an accommodation at one of their portfolio of resorts. So instead of paying all the money towards a second home that you only use every so often, the vacation clubs such as Marriott are a way to just enjoy the vacation home without the ownership hassles. Does that make sense? And that's part of their pitch. Each resort location has a full staff and team taking care of all the details, such as cooking, cleaning, providing activities to do. And these timeshare mansions and resorts are usually located in areas that people would describe as paradise, or where retired folk would like to golf. And the best part is, if you're going to Hawaii in a particular year, you can rent a timeshare in that area. If you're going to Disney World, you can rent one in Florida. And I want to say this up front. On a personal level, I do not like them. And that's because I do not agree with their business model. Once you sign up to be a part of their timeshare program, you're locked in for life, unless you can sell off your membership to someone else. That means you're gonna have to pay that annual fee every single year until you die. And not only that, you also have to pay annual maintenance fees on top of that membership fees in order for the properties to be taken care of. And the reservation process is done on a points system. From what I read, you have to book as far as 13 months in advance to get the dates and location that you want. So for instance, a studio room will cost about 1,000 points. But if you want to stay in a 4-bedroom accommodation, then it's going to be like 9,000 points. And based on your membership tier, you get a certain amount of points every year that can roll over to the next year so that you can stack your weeks of vacation like 3 years out. That's what you're buying, vacation points, and to be a part of the vacation club. It's a little different from a traditional timeshare. However, 87% of their EBITDA contribution are from people buying into the vacation club, that subscription fee. The other 13% are from folks who bought memberships from a global vacation club such as Interval International. If all of that was confusing, just think of Marriott Vacation Worldwide as a glorified hotel program and their balance sheet looking great because it's similar to Costco's membership subscription fee. Their dividend yield is 3.2%. Their dividend payout ratio is 48%. In 2015, they paid out $1 per share in dividends. And you fast forward to 2023 and they paid out $2.88 last year. However, if you notice, there's a huge blank right here. And that's because Marriott actually cut their dividend during the pandemic to preserve their business. And they came out of it okay because they reinstated the dividend almost right away. But I want you to keep that in mind because they did in fact get rid of their dividend altogether for about a year. $10,000 would have been 18.3 grand. This spits out a CAGR of 6.1% during their best year. Oh my goodness, prior to the pandemic, they went up by 85%. During their worst year, they went down by negative 47%, which is really surprising to me because I would assumed back in 2020 they should have been obliterated, but in fact, they were actually in the green. So what is currently moving the market according to the Fear and Greed Index? It is greed, 71 out of 100. 100. I think that means Wall Street is optimistic. This is a good thing. This is all just semantics. Marriott Vacation just posted their Q4 2023 earnings on February the 21st. And guess what? They beat the EPS estimates and they beat the revenue expectations. Very good stuff. Also, they provided a forecast for their 2024 free cash flow. Marriott is estimating a high of $390 million and a low of $352 million. Let's go ahead and look at their past free cash flow to compare. So if we look at 2015, they posted $35 million as their free cash flow. And then as of last year, they posted $114 million. However, that was a decrease of 75% from the year prior, which explains why the stock has been taking a beating. However, if their estimations and forecast is correct and they post $370 million as their free cash flow, Wall Street is going to really like that. So let's go ahead and look at their top line, which is their revenue. What you want to see is a trend that is going up and up. And back in 2015, they posted $1.8 billion. And as you fast forward throughout the years, they have been consistently growing their revenue by double digits, except during the pandemic when it went down by negative 32%. But here is a red flag, or I guess a call out. As of last year, they were only able to grow their revenue by 1.5% from the year prior, $4.7 billion. That's pretty good. However, Wall Street is going to want to see Marriott grow this revenue number by double digits again. Next, let's take a deeper look at the technical indicators to see what the stock price movement has to say about Marriott. Based on their recent stock trading pattern and volume, it seems like Wall Street is pretty bullish on the prospects of Marriott. What I'm looking at right now to say that is, their RSI back in November was sitting at about 30 to 25, right? That's very bad. That's bearish. However, as you fast forward throughout the months to the current tense, now the RSI is currently sitting at about 60. And not only that, they're hitting their upper Bollinger Band again and again. I think it's only a matter of time, or with good news, that will send the stock back up high. How high? I don't know. However, from the stock trading pattern, things are actually looking pretty good for this stock. Alrighty, folks, now it's my most favorite part of the video. Now we're going to run some valuation models to figure out the intrinsic value for Marriott Vacations to see what their stock price is really worth.
Well, intrinsic value, in other words, the only reason for making an investment and laying out money now is to get more money later on, right? That's what investing is all about.
And then we're going to compare that to what the Wall Street analysts believe Marriott Vacations is worth. So the first one is going to be the multiples valuation. Essentially, we're going to look at their peers in the same industry as them to figure out a market-derived price for Marriott Vacations. Every single one of these companies are in the timeshare or hotel industry, hospitality, I guess you can say. And the median PE ratio is 15.9. So taking this number into consideration with their current earnings per share of $5.84 a share, this gives us a valuation of $93.27. Next, we're going to be looking at the DCF analysis model to figure out their intrinsic value based on their free cash flow growth. So based on what we looked at earlier, we can say that their cash flow is all over the place. So when we look at the average growth rate of the free cash flow, the data says that it is a 92% year-over-year growth rate. However, that is way too optimistic for my risk profile. So instead, we're going to divide that by 3 and plug in 30% into the equation. Taking this number into consideration with some balance sheet numbers, that is going to give us a DCF price for Marriott Vacations, $79.25 a share. Let's move right along to the dividend discount model. Essentially, we're going to figure out an intrinsic value based on their average dividend growth rate. Their dividend history is kind of all over the place because during the pandemic, they even cut it. So when we look at their numbers, it spits out 14.3% as their average dividend growth rate. However, because of that dividend cut, I am going to divide that by 3, rounding up, and plug in 5% into the equation instead. Because I don't want to be overly optimistic, right? Because when times got hard, they did not hesitate to pull the cord on the dividend. Who's to say they won't do it again in the future? So with 5% into the formula, that gives us a DDM price for Marriott, $106.40. And the last one is going to be the Benny Graham's valuation model. And that's going to give us an intrinsic value price of $102.89, which takes us to the conclusion. What is the intrinsic value for Marriott Vacations? Well, that's going to be $95.45 a share. Remember, it's currently trading trading for about $94, so it's not off from that number. Let's go ahead and see what Wall Street had to say. So Wall Street believes that Marriott Vacations should be trading for about $121 a share. The low forecast is $65. That is literally the biggest bear in the market. And then the high is $208. That's way too optimistic. So when we think about our valuation of $95, I guess we are a little cautious and a little bearish, because Wall Street says 121, we said 95. So after hearing everything, you're trying to figure out what is an acceptable buy price for Marriott Vacations. Well, to do that, we need to bake in a margin of safety to figure out a good price adjusted for our risk.
And you don't need a huge margin of safety. You should have something that you always should feel you're getting a little more than what it's worth. And there are times when we've been able to buy wonderful businesses at a quarter of what they're worth.
Now, with a 10% margin of safety baked in to this intrinsic value of $95, then the acceptable buy price becomes $85.91 a share. When we look at their 52-week range, they did hit $72 back in November and December, so that price target of about $85 is not outrageous. But because Marriott Vacations did cut their dividend and you want more of a margin of safety baked in, then let's go ahead and say 20%. With a 20% margin of safety baked in, then the acceptable buy price becomes $76 a share, which is still reasonable. Now, if we plug in the Wall Street number of $121 a share, with a 20% margin of safety baked in, then the acceptable buy price is $96.80 a share, which is essentially what it's currently trading for. What you see on your screen is the balance sheet for Marriott Vacations. And what is my opinion of Marriott Vacations Worldwide? Well, because they do have a history of cutting their dividend, out of honor, I cannot label it as a delicious dividend company. However, it does have a promising rebound story, a fantastic business model, it's subscription-based, and it's a cash-generating machine. That's my take. If I were to have made this video back in 2021 during the height of the pandemic, when the dividend was freshly cut and the pandemic timeline was unknown, then I would have labeled it as a disgusting, hideous, smelly dividend company without hesitation. However, now that 3 years have passed, it's not as disgusting anymore. I think it's a rebound story, and I believe in it. However, at its current valuation, I would say there are better opportunities in the market. With that said, if the price comes down to like $80 a share, or even like $78 to $75 a share, then to me, that seems like an opportunity. But please do your own due diligence and research to figure out, is a timeshare company actually a good investment? With that said, Dividend Compounders with Cheese signing out. I'll talk to you next time, everybody. Stay safe.